Market could have rallied today, didn't. So, maybe we've got the other leg lower. I think people want lower. I think there's a lot less buyers around right now, again, because a lot of hedge funds have got their positions trapped. The macro for me has been, are things turning? Is inflation coming off? And is therefore the rate of change of rate increases going to reduce or not? So my view is that we've seen the peak in CPI. The market's starting to realize that they've been overestimating CPI, and therefore inflation is going to start coming off. We saw that with PPI today as well. And I think we'll start to see unemployment pick up, whether it's this month or next month. Those are the signals the Fed is looking for to slow down. So when they slow down, it's the rate of change of interest rates that matter, whether they do another 50 and another 25 or another 50. Either way, we're getting towards the end of the rate cycle where they will pause. The pause is enough for the market to perceive it as the lack of pressure holding this balloon underwater. And when you take it off, the balloon can rise. My guess is inflation will be below 4% sometime around February, March of next year. And in which case, if it continues to fall, which is my base case, in fact, I think inflation goes negative, then we will see the Fed eventually pivoting and going to rate cuts instead to stimulate. But that game is to be played for. Right now, it's a matter of the end of the macro story and liquidity coming. In the middle, you have cycles. The cycles are driven by liquidity, same as all assets. And liquidity being drawn out as M2 shrinks, the Fed raise rates, other central bank raise rates, means that crypto falls. As liquidity flattens out and starts turning up, then crypto rises, as do other risk assets. So that's the basic cycle. Where we are now is the liquidity cycle has now met the bottom of the exponential trend, the adoption trend. And that becomes an extremely interesting time to focus on accumulating crypto. And we saw that starting in June in the crypto markets as the centralized finance part, the CeFi part of crypto blew up as credit became less available, and you start seeing who's swimming naked when the tide goes out. And there was a whole bunch of people swimming naked. What we didn't realize is there was a naked whale, and the naked whale was FTX and Alameda. I am very focused on crypto right now, as I am the macro cycle, because they've met at the important part, which is the bottom of the liquidity cycle and right on that secular uptrend of whether it's the 2 standard deviations oversold in the log regression channel of Bitcoin or whatever thing you want to use to show that we're there now. Now, that doesn't mean I'm saying the price needs to have entirely bottomed. I think actually ETH bottomed in June, but I don't know yet. Could it have a further spike back down to 1,000? I don't think it takes out the 700 and whatever low that we had, but let's wait and see. I have a slightly variant view, but you can't have much confidence. I think most of the bad leverage was taken out in June, and this was the final part that should have happened in June but didn't. So what are the knock-on effects? Well, normally if Alameda had gone bust, the knock-on effects would have been Celsius and BlockFi, etc. They already went bust. So we've got the knock-on effects of FTX having bought them and then can't fund them. But I think that was a kind of known failure. So is there somebody bigger here that is yet to get knocked on? Some people have looked at the banks like Silvergate. It's possible. I don't think that it's systemic for the banks in that respect, the crypto banks. Signature, Silvergate, those two are the main lenders in the system. What I do know is there's a lot of hedge funds trapped in FTX because FTX was really the avenue for the ability to short markets via the perpetuals. So a lot of hedge funds use them and they've got that assets trapped, which is a shitty situation for everybody involved. And so it's kind of muted the market, which is why it's been so quiet. But there could be other shoes to drop. I don't know really who they are or what they are. People have been looking at Genesis, Jump, and the other market making firms. Is it possible Well, they've all said no, but as we know, that means nothing in this world because everybody says, no, we're all fine. We're just going to have to wait and see. But I am biased towards, if there is another sell-off, you want to start aggressively adding into it. Because the macro cycle is turning, and I think this is the final phase, the capitulation phase. And please don't use yield. Staking yield is fine as long as you understand that your risk is the currency that you're staking in, which is Ethereum or Solana or whatever it is. That moves up and down. You're going to make or lose money according to that. But the yield is relatively safe because it's written into a smart contract. Yield otherwise, I don't like. I don't take it. I don't use it. Same with leverage. Market could have rallied today, didn't. So, maybe we've got the other leg lower. I think people want lower. I think there's a lot less buyers around right now, again, because a lot of hedge funds have got their positions trapped. It's either mainly priced in or nobody can short the market. Who else is left to sell? Most of the people are kind of diamond handers right now. Most people got flushed out in June. So I'm actually not that bearish, but I'm open to the possibility there's more downside. I'm pretty sanguine because my time horizon is much longer term. So I expect machinations like this. I expect 80% drawdowns. I've had them in the past several times. I'm kind of used to it. And remember, once you put it on a log scale, those drawdowns never go to the previous low because we've got an exponential uptrend over time. So, it's really a long-term game. I'm not a short-term trader, so I can't really help with the short-term side of it. I think it's dangerous in an 80 vol market unless you really know what you're doing to be a short-term trader. But be a long-term trader, these kind of points are really interesting. Bitcoin and Ethereum to basically die. I don't think they can die. Can interest die over time so you end up with a smaller pool of users? Well, we haven't seen much evidence of that. If I look at the Metcalfe's law models, these networks haven't really grown a lot since 2021, maybe even the end of 2020, and that's to be expected. But for them to die, we need all of Web3 to stop developing and the exponential trend of adoption to entirely stop. And I think that's just highly unlikely. So I just don't see it. Not all exchanges are going to zero. I mean, people like Coinbase run really good exchanges. I'm pretty confident of places like Kraken. Now, you can't be 100% confident in anything, but Kraken run a pretty conservative business model. And so several exchanges do. So don't assume every exchange is terrible. We've seen it in financial markets. Not every bank is terrible. Not every brokerage house is terrible. But Christ, we've seen banks and brokerage houses go bust. We've seen hedge funds go bust. Not every hedge fund is terrible. So don't throw the baby out with the bathwater. Just realize that in FTX, there was bad management and fraud. And that deserved to go under. It did not deserve to take people's money with it. And it's horrific. And as I said, I got caught out in MF Global in the futures brokers market with something like that too. What the fuck's going on? Liquidity is being drawn out of all financial markets. Anybody swimming naked will be shown up as the tide goes out. It's as simple as that. It's as old as the leverage cycle. Humans love sex and they love leverage almost equally. It's ridiculous, but that's what they do. Bitcoin itself performs at about 140, 50% a year through the cycles. And yet people still want to take leverage on that because they think it's not enough money. It's ludicrous. Anybody who's been around this space for a while and seen bankruptcies happen is the reason I got into crypto in the first place was because I went through the financial crisis and nobody knew who owned what in the banking system. So when Lehman went under, it was a big mess of trying to figure out who the hell owns what. Then in Europe, Cyprus, the banks went under, and in Spain we had some bank failures too. And what happened is in Cyprus, they bailed in the depositors, which means you were just happily leaving your money on deposit in the Cyprus bank, and they take it and say, well, it's actually our money now, you don't own it. In Spain, they did something even ruder. Well, I don't know if it's even ruder, but more Machiavellian. They told savers, hey, listen, we can give you higher rates of savings on these things on this account. That account was preference shares, and then they defaulted on the preference shares as the banks went under. It was criminal, but they didn't get prosecuted for that. So this kind of shit happens all the time, and I saw that, and when I saw blockchain, I realized that you could self-custody, own your assets outside of the financial system, and nobody could touch them. That is the key thing about the crypto markets that make them different. I really like Solana, and I understand that the chain breaks. I also understand that they're fixing it. I also understand that that's a known. And one of the elements was it was concentrated in its ownership because of FTX. They are now having to liquidate it, and so you're getting rid of one of the issues. Solana itself, I think, is doing something very clever. In cryptocurrencies, what matters is narrative. Bitcoin narrative, digital gold, for example. Ethereum, the internet, the distributed internet for Web3. So where do these other chains fit in? Well, Solana has and is building a narrative, which is it's the consumer chain. These are the people who've done the deal with Meta, doing deals with Google. They've got stores, they've got clothing lines. They have a consumer feel to it. And I believe consumer adoption, not at owning cryptocurrencies, but the use of NFTs and other digital assets is only going to explode over the next few years. We've just seen Nike building out more. We've seen Adidas. We've seen the fashion brands. We've seen Ticketmaster. We've seen so many people. And I think this is a really, really important thing. And I think Solana has a bloody good chance. And Solana reminds me of Ethereum back in 2018 when it was down 97% and nobody cared. And that was a great bloody opportunity. So I actually really like Solana. I also like Matic, Polygon, they're doing the same. They're really finding use cases at scale, and that's what matters for Metcalfe's law, and therefore that's what matters for price. I just kind of understand Solana better because it's a layer 1, not a layer 2. So with a layer 2, the value accrual to the chain is less because they charge lower fees. So I don't know how that works. Now, it doesn't mean I don't like it. I think it's great. But I don't know how the value accrual works in the same way. And therefore, it's less obvious to me than Solana. But it is a great project. I have nothing against it. I own some.